In this video, we're going to talk about Vinco Ventures, trading under ticker symbol BBIG. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. So most of my videos are recorded and scheduled the day before and uploaded for the next day. For 5 days out of 7, it's a trading day, so of course by the time the video goes live on my channel, the price would have already evolved from there. If there are significant and very volatile movements during the trading day, obviously they will not appear in the video on that day. But usually, to the extent possible, my analysis will be based on the medium term and not really focused on the intraday movements. The reason why it shouldn't matter that much either way is because most people investing in stocks invest for some kind of reason that takes time to get developed, and that their positions are usually kept for at least a few weeks. With that being said, if there are significant stock price movements that happen afterwards, either they will not affect the overall picture, or if they're significant enough, they will be mentioned in the next video about the stock, with re-evaluations of the circumstances as needed. Vinco operates in the consumer products and digital marketing sectors. Its most important asset is a social media platform for video streaming in the Indian market. It's definitely one of the more popular platforms, which is also expected to fill in the local demand in one of the largest markets in the world. It's both having a good narrative because of the video platform and because it is in the middle of a short squeeze between two parts who want to either push it lower and who want to squeeze out those who want to push it lower. The company was founded in 2017 and is based in Pennsylvania. The market cap of Vinco Ventures is currently at $494.4 million, with an enterprise value at $70 million. The market cap is the price tag financial market is willing to evaluate Vinco Ventures stock at, with a consideration to its future potentials as well as the short-term fundamentals. The enterprise value of the company is more of an accounting result, like a net result of the company's assets value once the debts are removed. Usually, the market cap is higher than the enterprise value, but sometimes there may be exceptions because the company may be highly leveraged or there are some unusual operations going on, like short squeeze or short selling. So in that case, despite the fact that there are short selling, Vinco Ventures is still going strong because there is a huge premium between the market cap and the enterprise value. Now let's talk about the options market for Vinco Ventures. In terms of volume and open interest, the market favors the call options by a large margin. Generally speaking, the put options mean that the market gives you the right to sell the stock at a certain price, and the call options give you the right to buy the shares at a certain price. So this is why, generally speaking, the put options mean that the market expects a pullback or even worse, and the call options mean that the market expects the price to move up. The key strike prices where there seems to be the most interest are the $4.50 level, $5 level, and the $6.50 level. The quick ratio of Vinco Ventures is 9.03. The current ratio is 9.13, and the debt over equity is minus 0.21. In other words, Vinco Ventures is very reasonably capitalized. It has very good cash reserves, and it doesn't have any solvency issues. The average trading volume of Vinco Ventures has been 23.8 million shares, and the recent daily volumes have been 17 million shares, 21 million shares, and 15.5 million shares a day. The 1-year beta of Vinco Ventures is currently at 4.25, meaning it is a lot more volatile than the rest of the market. its 52-week high is $12.49, and its 52-week low is $1, or just barely above $1. Looking at the financial statistics, the fundamentals, and also the narrative around the company, I believe that there are quite a few indications that unless the short sellers manage to quickly, in like the immediate term, to quickly squash the stock price now, at some point there will be a few massive catalysts coming down the pipeline, mostly having something to do with monetizing the video platform. The company is very liquid, it has a limited amount of outstanding shares, and the current price is relatively cheap and reasonable, which justifies an increase of exposure in Vinco Ventures now. As for the fundamentals of the company, I would say that you should definitely put a few grains of salt in the very optimistic analysis that is currently available, because even if those assumptions and projections are reasonable, it doesn't mean that they will necessarily happen. Because back in 2020, we had quite a few EV startups where people were saying wonderful things about them, that they were, reasonable to occur. It doesn't mean that they actually occurred, and it doesn't mean that those companies are anywhere near the map. So definitely adjust your position size to the risk that you're willing to tolerate. Because Vinco Ventures is definitely not one of those stocks that you would feel safe to own a lot of. Overall, my recommendation is to keep your existing positions or to increase the exposure in Ethereum stock as long as it corresponds to your risk profile. My suggestion is to keep the total exposure below 1% of your portfolio and to hold it until the next major surge caused by shorts recovery. In this current market environment, I believe that we should be careful about taking positions and risk in the financial market in general, and in the equity market in particular. Because over the past decade or so, the financial market has been living with the help of newly created capital from QEs, resulting in a massive increase of asset prices and the corresponding decrease in their yields. And the low interest rate also contributed to reinforce this phenomenon, because the financial sector would see its profit margins reduced, and in turn keeps the returns of other sectors and employees low as well. At the same time, the market doesn't represent the real economy, and the real economy doesn't get reflected in the price of different securities. The market is a game of supply and demand, which will depend on a number of factors, not just the fundamentals. If the asset prices only depend on the fundamentals, then their performances in the Northern Hemisphere would have been more than mediocre, because things have been mostly stagnant over the years. A few things can explain why asset prices managed to remain high despite the stagnation of the underlying businesses. The first one is that over the years, there has been more money printed by different central banks to support their own economies. But because that money is distributed to banks and expected to loan to businesses to create more jobs, and that in fact there aren't that many opportunities out there, this money became capital that travels around the world and went into the huge financial melting pot. The QEs are now wrapping up in many countries, so I don't think that it'll remain as the main driving force over the next couple of years to keep the asset prices up. But it's compensated by the arrival of new capital from different regions to North America, because it's perceived as a safe haven for investors. With the rising tensions around the world, this capital inflow will probably be sustained over the next couple of years, if not intensifying. The last phenomenon is the creation of artificial bubbles that are either supported by real market trends or completely fictional ones to allow market participants to play the game of hot potato and to either create profits or to safekeep their capital. The EV sector back in 2020 is an excellent example of this. But nevertheless, what it means for the market is that the degree of uncertainty is probably going to increase over the foreseeable future, as the expectation for a recession has been building up for more than a decade, and that the economic difficulties are accumulating around the world, especially from Asia. What this means for the market and for us is that the volatility is supposed to increase over time, which will provide opportunities to make a profit or to incur losses, depending on the timing and risk management. Another thing to note for this period of time is that we have to be very careful about having shorts. It's already riskier than having longs because the losses of shorts are not limited, right? Because there's no limit in terms of how far the stock can increase. But with the increased involvement of short sellers, I believe that the stocks been shorted will have an even higher probability of getting squeezed, which will result in potentially massive losses. So we're also observing more of an irrational behavior from market participants, in the sense that very often people will choose to rush in a position not necessarily because the fundamentals are convincing, but because there's a buildup of demand in a specific stock and people will pile in to ride the gravy train with the rest of us. That kind of behavior is highly risky and may result in losses. It's worth pointing out that in 2020 and probably in 2021, the market has never presented that many opportunities, but it was also during that same period of time that many retail traders have incurred their biggest losses. A rule of thumb is that each position should be structured so that even if they don't succeed, they don't impact the portfolio stability. Positions should begin small so that there is an opportunity to average down later. And specifically for the growth stocks, I think that 5 to 10% overall should be a healthy weight for the portfolio. And each stock should represent about 1 to 3% of the positions. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.